UK Finance estimates the number of debit card payments in the UK has risen from about 7 billion in 2011 to 20 billion in 2021, and over 57% of total payments volume in the UK is now on some form of card-based payment. Much of that growth has been driven by the rise in contactless and wallet-based services such as Apple or Google Pay. The numbers are only going to increase. UK Finance estimates card payments will rise to 61% of all transactions within the next 10 years. If you've received a card or made a purchase using one of these best-known digital banks, as a payments processor, we've probably played a role. Over the next 5 minutes, I'm going to provide an overview of the rapidly changing payments processing landscape and how Thredd, as the UK's leading issuer processor, is responding. In the beginning, long before the internet or smartphones, card payments were processed under what is referred to as the four-party model. An issuer, Party 1, provides a card to a cardholder, Party 2, who uses that card to buy goods or services at a merchant, Party 3, who then submits and receives payment from the card network through their acquirer, Party 4. It was a pretty straightforward model, generally owned and run by large banks on both sides, and it continued to work that way well into the late 90s. But that was all about to significantly change. Things first really shifted in the late 90s as the internet created e-commerce online shopping channels and numerous new entrants emerged, such as PayPal. Cash and cheque payments weren't an option for online payments, so cards were the only viable option. But the experience could be cumbersome. The user experience was very time-consuming, and that in turn led to increased cart abandonment and lost sales. Fraud and liability rates were high, and those were passed on to the merchant. This led to the development of things like one-click payments and new risk and authentication methods. But this really only digitized the merchant and acceptance side of processing. Banking itself wasn't fundamentally changed. Some internet banks emerged, but very few succeeded, and the only survivor got acquired by a large UK bank. As a result, in the early 2000s, we saw payment service providers, payment facilitators, and some very high-profile players such as Adyen, Stripe, and Square begin to change the face of payment acceptance to support the rapidly rising number of payments taking place as e-commerce exploded. Then, in the 2010s, the impact of smartphones fundamentally changed banking and payments and saw the emergence of issuer processors helping to digitize card issuance and payment processing. Banks perceived the smartphone as just another communication channel, but innovators saw it as a way to completely change and improve the customer experience, from how you applied for and opened a bank account, receiving a card instantly that you could store in your phone's digital wallet and use to spend straight away, and have much better data to budget, control, and manage your account. Cards changed from being products, such as a credit card, where the key differentiators were balance transfers, APR rates or loyalty programs, to niche app-based solutions such as small business banking, parent-child propositions, or multi-currency travel accounts. The Thredd team, or GPS as we were then known, were fortunate to have helped most of these early brands get to market quickly and effectively. These innovative fintechs recognized that they could leverage our team's payment expertise to help them understand the quite complex requirements to interact with the card schemes, so that they could focus their resource and attention on the areas where they could drive the most customer differentiation and value, the digital experience. We're proud to have been at the forefront of helping these pioneers start their businesses, and we continue to help many new fintechs bring their visions to market. There's no question that these players have fundamentally raised customer expectations for their digital banking experience. And in underserved segments such as small business and financial inclusion, it's been truly game-changing in terms of access to banking and credit services. The 2020s have seen a huge rise in the number of use cases emerging where leading innovators are embedding digital card capabilities to support completely new propositions that offer better customer experiences, improved economics, and lower operational costs. Where card products were defined as credit, debit, prepaid, or commercial, now we're being asked about the features. Innovators have repurposed cards as a product to cards as a service, and are leveraging those capabilities to support and deliver those improved customer journeys. At Thredd, we've embraced and led many of the emerging payments growth areas by being a trusted partner to innovators around the globe. We've rebranded to reflect our essential role, a smarter partner for organizations. While our clients actively add card issuance capabilities into the new value propositions, they can rely on us to provide the payments expertise. We are continually expanding the range of use cases and markets we support. We are poised to help our clients capture the explosion in demand for new forms of digital payments.